Good afternoon and welcome to Daily Stock Market Update. The DCX remained flat for the second consecutive day, marginally gaining 9.85 points or 0.16% and settled at 6,328 points. Market turnover was BDT 6.84 billion, which is a decrease of 1.53% compared to the previous trading day. Titash Gas and Disco from the fuel and power sector, Bajaj Paints and BSRM Steels from the industrial sector, and Pubali and Bragg Bank from the banking sector mainly pulled the market up today. On the other hand, Pioneer Insurance from the general insurance sector, Sonali Paper from the paper and print sector, and Alif Industries from the textile sector mainly dragged the market down today, keeping the market flat. All the sectors gained value today except the textile and general insurance sector. The life insurance sector registered the highest gain of 1.25%, while the fuel and power posted the second highest gain of 0.88%. On the other hand, the general insurance sector registered the highest loss of 0.72%. 5 industrial companies and 2 pharmaceutical companies were among the top 20 gainers today. Magna Insurance, Global Heavy Chemicals and Sherwood Industries registered the highest gain, while Apex Tannery, Al-Haj Textile Mills and Haqqani Pulp were the top losers. Global Heavy Chemicals declared that it received an A+ credit rating in the long term and ST2 in the short term. There was no disclosed price-sensitive information for the remaining stocks. The trading volume of Bajaj Paints, Titash Gas and Global Heavy Chemicals increased significantly today compared to the average trading volume of the last 3 months. Investors might have shown interest in Bajaj Paints stock due to the company's upcoming record date on 26 July 2022. There was no publicly disclosed material reason for the volume increase of the remaining stocks. Today's top 2 news. Private sector credit growth grew to 12.94% in May, the highest in more than 3 years, mostly influenced by the strong economic recovery after the pandemic slowdown. However, mounting inflation and exchange rate volatility will reduce the fruitfulness of this growth. Bangladesh's inflation reached its 8-year high of 7.42% in May due to global commodity price hike. This imported inflation should be the major concern for the government instead of higher GDP growth. The government should focus on tightening monetary policy for the coming fiscal year 2023 through withdrawing the lending rate cap, which will ultimately tighten money supply. However, to ensure inclusive growth, it is also important for the government to focus on ensuring money flow in productive sectors and job creation. The loan moratorium facility for all borrowers has been extended by Bangladesh Bank till December 2022. The borrowers can avoid being classified as defaulters if they can pay back 25% to 75% of their installments. Loans given to cottage, micro, small and medium-sized enterprises and the agricultural sector cannot be classified if 25% of the loan is repaid from April to June, 30% in the July to September period, and at least 40% in October. Under the new extended moratorium facility, the large industrial borrowers can repay their loans in phases 50% by June, 60% in July to September, and 75% from October to December without being a defaulter. That's all for today. We'll be back again next week with more updates on Dhaka Stock Exchange. Follow LR Global on Facebook, LinkedIn, Twitter, and subscribe to our YouTube channel. Thank you.